This is your LMAX exchange technical update for Monday, November 6, 2017. Euro dollar. So the euro has been consolidating just below that neckline that was triggered the other week of that head and shoulders top, which does expose possible drop all the way down towards the 112s. At the same time, we need to see the market get going to the downside to strengthen that outlook right now, which will require a break back below some recent support at 115.75. On the top side, if the market establishes a break back above 16.90, it would suggest that we're delaying any downside pressure ahead of what could be a bit of a corrective bounce up towards the 1750 area. But overall, while we hold below the top of the right shoulder here, which comes in at 118.80, the pressure does remain on the downside and delays the prospect of a resumption of this more significant uptrend that we've seen in the euro in 2017. Sterling dollar. So the market continues to chop around. There was a lot of choppy price action last week with the market bid up before selling off sharply into the latter half of the week. But overall, the market has been confined to this 130.27 low that was seen all the way back on the 6th of October and the recent high up towards 133.40 at 133.38 on October 13th. A break and close above or below on either side would be required for the next directional insight. However, we would say that a break below 130.27 and a close below there would open setbacks that should be limited to the 127s, with the greater risk medium to longer term for some form of a base and continuation of what is now a more constructive outlook following the break earlier this year above 27.75, which favors a push back towards a retest of the 2017 high up around 136.60 and then beyond there into the 140s. Dollar yen. So dollar yen has been flirting with the top of a range that we've seen over the past several months. For a good portion of this year, the market has been trading within a consolidation, and so there's a lot of resistance up here in the 114s and even into the 115s. Ultimately here, unless the market breaks and clearly breaks on a close above 115.50, this range bias remains intact and there's risk for a topside failure and for another downside break. Key support over the coming sessions now comes in at 112.95. A break below there will strengthen this range outlook and put pressure back on the downside. Euro Swiss. Euro Swiss has been very well bid in 2017. The market has finally shown signs of a more significant structural shift here this year, breaking above 110 and then again above 112, some key resistance areas. And now the market is pushed up to 2017 highs above 117 and looks like there's scope for a more significant run up towards that previous major level going back to January of 2015 and before that, which comes in at 120. So any setbacks that we do see here should be very well supported, ideally in the 114 area, but certainly we should not see the market establish back below 112, or else that will delay or even negate the constructive outlook for Euro Swiss. Aussie dollar. So Aussie has come under pressure over the past several weeks, really since topping out by a plus 2-year high back in September. And the market is now traded down below some support, which came in at 80, and then below some 77 area support. And this leaves scope for the next downside extension into the 75 area. At this point here, only back above the 79 recent lower top, that was the high that we saw back on the 13th of October, would compromise this outlook. Dollar CAD. So dollar CAD has seen a very impressive recovery rally over the past several weeks, with the market bouncing out after averting a retest of that psychological barrier at 120, but making a plus 2-year low. The market has since recovered, and now it looks like we could see additional upside here with setbacks well supported, ideally ahead of or around 126, in favor of that next higher low and fresh upside extension back towards and possibly through the psychological barrier at 130. Here, only back below 124 would compromise this outlook. A Kiwi dollar. The New Zealand dollar has been under quite a bit of pressure over the past several weeks. The market has seen a bit of a bounce after just matching the 2017 low from May at 68.18, but any upside here should be very well capped. Right now, ideally in the 70 area, ahead of a continuation of declines below 68.18, exposing a move towards the 65 area. Only back above 72 here would compromise the bearish outlook. SPX 500. The S&P 500 is inching closer to its next key psychological barrier at 2600. the market is in record territory and continues to push to record highs despite technical readings on a medium and longer term basis that are showing a severe overextension. At the same time, though, we would need to see a break back below 25.44, that low that we saw back on the 25th of October, also a low that we saw on the 19th of October in that 25.44 area, to take the immediate pressure off the top side. Gold. So gold has been overall constructive with the market gradually pushing higher. There have been some severe setbacks along the way, but the market has been putting in these higher highs and higher lows. And so this latest round of setbacks that we're seeing are expected to be supported ideally ahead of the 1250 area in favor of the next major upside extension to fresh 2017 highs beyond 1357 and towards and through the 2016 peak at 1375 further up. Only back below 1200 would compromise this outlook.